Hello, everybody. This is George, and I wanted to kind of pipe in and quickly talk about the trading day today and the trades that we took and some of the logic that we used to really do fairly well today. And also a bit of a forecast to what we're looking for tomorrow. So let's start the day. And we all started up trading NASDAQ 100. And these are the trades that we took. So at 8:30, the market just shot up. And if you take a look, the market started with a swing high or a swing trade that initiated around 2 o'clock Central Time. And we continued to kind of just move higher and higher throughout the night into the 8:30 cash market open. The market was between target number 3 and 4, and it just burst up and continued to trade all the way to 9 o'clock. And I wanted to spend some time to learn the price action for the day. So did not take any trades during that time till we shifted the cloud from positive to negative. We took our first trade right there at 94.61, at least the first trade for the cash market. So 94.61 is our entry. We took a bit of heat, nothing really big, to be honest with you, but it's within channel 1 and channel 2, so the channels were in our favor. And from 61 to 54, we took that trade. So let's take a look at the blotter, so this way you could see what we're seeing. So that's the first trade for the day here. So the trades prior to that were early at night. So we made about $400 in that. And we made $126 on that specific trade that we just looked at. Now, I saw a switch trade and wanted to see a break below that level at 48. That didn't happen, and I quickly covered for a negative 257. Then I waited and I waited and I waited, and by then it was 11 o'clock and we shut down the room. So after that, I put my scalping hat and I was like, okay, let's just scalp this market. And the reason why this was more of a scalping day is the fact that we ran up so big during the Globex session. If you ever want to know if a session that you are about to trade is going to be churning and consolidating, look what happened overnight. If the overnight expands and expands significantly, either up or down, the odds are the morning session between 8:30 Central to probably 10 is going to be, and sometimes even further than that, is going to be very circular and choppy. So I took that assumption and started to do a 2-point trades, meaning that I'm looking for a 2-point targets on 2 contracts, and those are fast action, in and out. You hit it and you go, and literally it's within seconds, because the majority of these trades didn't really take that much at all. Like 56 to, actually that took about 40 seconds. A lot of that one took about 2 seconds. Yeah, that took 2 seconds, and it just happened very, very quickly. And let me tell you what the rationale is. So the rationale is you get a pullback, and typically there is a certain rhythm to every future instrument. You will find out that minor moves in NASDAQ 100 moves in 3 and 5 candles. So the market, for example, will pull back 1, 2, 3, pause. 1, 2, 3, 4, 5, pause. Look at that. I mean, there's just a perfect demonstration right there of the power of numbers into understanding NASDAQ. And for all practical reasons, all future markets, they have that rhythm to them. So understanding that rhythm and knowing what the count is really help you with order placement. So we saw 1, 2, 3, 4, 5, 6, and a 7. So in the 7th candle, boom, in, out, done. Thank you. So in that one, we made $82. 2 contracts. The one after that, Let's see what we did here. 1, 2. Yeah, here we go. The one at 56. Yeah, that's the one here. So we got in, and that count was 2, 4, 6, 7, 8, 9, and okay. So in the ninth, then that candle happened very quickly. So I took the one after that, but with the understanding of where I'm at. So boom and out, and the stops on those are fairly small too. It's typically less than 5 points, if not less. And there's a trailer that actually will cut that down a lot faster. But there's such a high probability event that if you encounter a market that is consolidating, it's a beautiful tool to actually generate some income while waiting for the market to actually be trendy. And we have a capacity to understand and the tools to understand what that means. So boom, we got in, out. And here, the same count, 1, 2, 3, 4, 5. So the entry here was should have been a bit higher at 70, but there's a subsequent entry right under the prior high from that candle. So that would be right here at 67.25. We entered and boom, I mean, it just did not take any time. That was a 67 to 65, 2 points. Thank you very much, $72. So my MAE on that one was $10. So that's just very low as well. So obviously that market ran significantly. This is an inception trade that we take, and we usually target a lot bigger price action. But since I made the decision today to just kind of stick to scalping, then that's what I'm going to be doing. You make a decision, you stick to it. So again, here, 1, 2, 3, boom, 4. That's actually 3, and we got it on the 4th, a profitable trade. And that was this one. The one after that, 1, 2, 3, in. And see what happened? Intra candle. It's even though it didn't close lower, that doesn't mean every single one of them is going to do the same exact thing. But that is just the natural rhythm of that instrument. It's almost like you are trading in the noise. So you have to find out where the noise areas are, and then place yourself in there and take a small piece and move on. Small piece and move on. So we got in there, boom, in and out, done. Here we go. Market shifted positive, so we started to take the longs on that sequence. 1, 2, 3, 4, 5, and enter, out. 1, 2, 3, and that happened very quickly. So I took the candle after that and done, up. And then the market shifted. So same sequence. And it's just ridiculous how well they work actually. 1, 2, 3, and 4th, an intra candle, I am in the noise. So you will find out, that's another tip that is fairly important to understand. Where does the noise happen in the market? And where is the direction that happens in the market? When the price separates and expands away from the middle of the range, which is the moving average, for example, that's the 35 EMA. Whenever you expand above that, trend mode. Whenever you collapse into it, that's when you are getting a very choppy, undecisive market. And a lot of traders will avoid that price. We say, oh, I want to only trade the trend once I figure out what the trend is. But they forget the noise. And there's so much money to be made in the indecision of noise. But you just have to have the right tools to actually get it done. So that's what that is. Boom, in and out, done. Okay? So the market ran up here, and there was also, here you go, 1, 2, 3, 4, 5. Okay, that's a 4. I waited here a little bit, and I saw that. And I missed my initial entry, and that would have given me a 2-point right there. So I had to hold off till the market turns around here. And that was I think, MAE, excuse me, 280 on that trade, which is not too bad. considering what the market is doing. So we picked up 2 points and done. And it gave a whole lot more. But I kept the count. And the count was 1, 2, 3, in, out for a long done out here. So I saw after that trade the fact that the market started to get a bit more trendy, and I started wanting to take advantage of that. So there are a couple of the trades are coming up. We are gonna we're gonna see that here in action. So here we go again. One more trade. 1, 2, 3. Okay, so 3, but we didn't have a shift in the market yet. It happened at 4, 5, and I was like, okay, 5. I'm gonna look for 6 or a 7. So 6 happened. I was like, that's good enough. I should have waited for the 7 because I would have gotten a much better price. But the outcome is the same. I've got it here or I got it here. The market was toppy and the market was going through a reversal pattern here. And that's all the noise I needed for me to actually get out for +2. So that is that trade. Now I'm turning around. I was like, okay, I gotta get a bigger move in this market. Okay, so I'm willing to take risk with a lot more size, and I got into 1, 2, 3, 4, 5, and got in 2. It gave me 2 points, but I didn't want to take it. Okay, I was like, okay, I have my range. I understand what the price is doing. This is what the price was doing here. It was coming into, see that range right here? This is a captain setup short. So that is an area in price action that presented itself that tells me that the price is going to have a hard time getting up here and just blow right through it. Plus you got the 9,500 as a stopping point. The price is having a hard time getting there. So that's the one of the areas that the price is going to struggle with. Second one is this captain setup short in and around 70. So anywhere in this area between 70 to 90, this price is going to encounter reversal patterns in a heavy way. So I don't want to take the 2 points because I knew this trade, I hate to say I knew, is just the probability is in my favor to see reversal patterns. So I got into a 2 here, waited 1, 2, 3, and added some more. And then the market ran to my target 2 where the resistance was very huge. And that's a reversal area for a lot of price action. So I end up with 10 contracts, and the price rewarded me with here it stopped and it spent some time actually. But I kept my stop. My stop was 5 points above this and above this average, and waited for the pullback. And it spent time. It tried to a couple of times, tried to get up there, never got up there, and then the crashing, sucking noise of price action just happened, and boom, sold, and that got us into $1,394. Okay, so we took a risk of 1,800 to make that. Okay, so let's keep going into the end of the day. I passed on, look how many trades. 1 trade profitable, 2 trade profitable, and this one I said, okay, I'll jump in on that one. So 1, 2, 3, and that's a good spot right here. I would have taken a bit of heat, but eventually would have paid on that. But I took it a little bit later actually. I gave it a little bit more count because we are at the end of the day, and typically the process has a little bit more force into it. So we took 1, 2, 3, 4, 5, 6, and on the 7th candle we took it in, and boom, in and out, done. Thank you. And then that's this trade, and we made $112 on that one. Last trade of the day, market that was at 15. So literally at the close, the price action was pausing. So felt like if the market is going to reverse and sell off, it's going to happen right there. So I took that trade, and I was willing to take bigger targets, but the market was just like literally very tight here, and it happened very quickly. and we ended up making 2 points on that. So we ended up the day at 26.83, and for the whole week we are up nicely, 12,037 from the 18th to the 20th. Is that the 18th? Yeah, 18th, 19th, and today's the 20th. So 3 days on that. So not bad, not bad. A lot of it is green, really. I mean, all this stuff is green. So what's the logic? The logic is recognize when the market is actually in a consolidation phase. How do you recognize that? If the market is really up big overnight, or up big or down big overnight, the odds are you're going to consolidate for an extended period of time, at least at a minimum in the morning. So you need to look at the market in a different way. Third, just understand the rhythm of the instrument that you are trading, and each one has its own unique rhythm. So me understanding the rhythm of NQ for trading it for years and years and years allows me to position myself in such a way where I'm capturing noise when most traders are just passing away from it or not knowing that it's happening. Okay, so that's that. So let's take a quick look at what we're looking for tomorrow, and we are seeing significant moves. If we're looking at a reversal, a V-shaped reversal, well, guess what? You have it. Market, since these lows around 7,000 and 6,800, has done nothing but look up, had 3 gaps that were significant in price action. The Fed, for all practical reasons, came and saved this economy and saved this price action, and NASDAQ, and we are in a V-shaped recovery. Who's getting hurt is the bears that did not realize this phenomena here. And be honest with you, it was a shock to the system to see that the price is continuing to run up this much. Everybody expected this price action to kind of at least consolidate, at least flat, not a V reaction. And the idea here is you can't go against the Fed and cannot go against liquidity. And they're pumping so much liquidity into this market. So here you go. We're about 300 points or so from 5, 6, 7, 250 points away from an all-time high. Who would have thought that, right? Who would have thought that? But it's here. And that's the nature of the market. You make money not by holding on to an opinion. You make money by actually trading with a high probability structure. Okay, so ES, you see something different here in the fact that where's the all-time high? We're nowhere around it, 3,400. So what's going on here? Technology stocks are outperforming because we think about them in terms that they will wither the economic slowdown that is coming. So the ES is not faring as well because the structure of ES is different than the NASDAQ. It does not have as much technology stocks. However, it's still recovering nicely, but has a whole lot more to go. Crude oil, that's another success story or reversal story, especially after the May debacle. And we all heard about the guy that invested $77,000 and ended up owning $9 million to the actual firm because it went negative $40 on the May contract. So that reversed and recovered. A lot of the inventory started to get eaten up by the actual reopening of the economy. So this channel number 1 is broken. Channel number 2, if we can get one candle reversal in this price, then we'll have the second channel on the downside. So at that point, we will get a consolidation in crude oil between the 32 to the 26, and we will look at the base of prices and how that will lead to either an upward momentum and a recovery, or a retest of not necessarily the lows, but probably a higher low that people can jump on and trade. Big picture stuff is things are recovering, and people are taking a chance on just resuming their daily lives, knowing the risk that the coronavirus has on their lives. So that's where we at. That's where we at. And the price action has a bid in it across the board, and you cannot ignore it. And you could sit here and say, okay, well, the market is about to turn here. You're fighting the liquidity, you're fighting the Fed, and you're fighting the momentum, and you are better off right now. If you are going to look at the market as a reversal, a good idea would be to watch the market run and then have a one-day reversal where the market runs up, then closes below the open. Once you see that, that is a topping formation. Then you start looking at the follow-up day as an area where you could position yourself for a short with a tight stop. I will play that game, but we're not there yet. So that is the review. One more thing, which is we'll take a look at the blotter here. Let's actually just take today. So the summary, this is where we at. So 20 trades, 19 winners, 1 stop, 95% for the day. And with these numbers, 14-1, we had the largest winner of 1,300. The biggest expense was 256. We had 20 trades, about 3.7. So definitely that's the scalping, because my average swing trade will be in the 6 to 10 minute range as far as how long I will hold on to them. More short than long, believe it or not. Yeah, because of that $1,300 trade, actually. But for all practical reasons, they're matched up as far as long and short. And that's where we at for the day. And so this market, tomorrow, we're going to be looking for the market to start bidding higher and into, as long as we trade above the 9,400, there's a potential to trade above 95 and hold for higher prices. But I'm going to be ready for anything. I'm going to start the morning with more scalping with low volume, and as the more of the day present itself, it gives you a unique feel about what's going on. You start seeing the trends develop. You start seeing who's getting trapped. You get better feel as the day progresses. So start small at the beginning of the day, and as you produce, increase your size. And try not to go too heavy too early, because you have not really developed that sense of that market. So that's what I have for you today. If you have any questions, let us know. And remember, always trade in harmony.